Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. Although my voice today is not great, please forgive me for my cold that I have. And if anybody is out there with a summer cold, you know exactly what I mean. It is out there. It is traveling through all of our neighborhoods, and somebody in the family usually picks it up. It's usually kids at the playground or at school. Obviously, school's not in right now, but certainly office, all kinds of areas where you're going to pick up germs and you pick up whatever the virus is. Well, I got it. But it doesn't come through the radio, so listen to the show and you can get some information about what we're trying to do. And what are we trying to do? Well, we've got three guests here today that are going to educate you on some things both in the mortgage and in the real estate market. We have some interesting information coming out of Washington, coming out of both the Fed, which at the airing of this show, you will not yet know whether the Fed is going to drop rates, which I think is a definite possibility, probability, I mean. We're probably going to get a 25% basis cut. Some are even saying 50 basis point drop. And I don't think that that's in the cards. Why? Because I think if they're going to drop once, they probably will drop again in October. And so you may get another one by the end of the year, i.e. 3 this year, which was kind of predicted. Now, we started out the year completely different, and we thought we were going to get 3 raises, or at least 2. And now we're into maybe 1, 2, 3 reductions. There is a fight between what's happening at the White House, what's happening at the Fed, what's happening with the people who are in charge of monetary policy as well as trade policy, both here and abroad, and I think that's affecting markets tremendously. We see the stock market continue to rise based on the fact that we have a 25 basis points reduction from the Fed. But when will that stop? What are the multiples for each individual company? We are in the beginning of what they call earnings reports, and those earning reports come out each and every quarter in order to let us know how companies are doing, how the country is doing in terms of the economy, and all of those things add up to what the bond market is going to do. If the country is doing well, if the economy is doing well, usually what happens is we get a lower demand for bonds, and bonds affect directly the mortgage market. And what that means with a lower demand is that you have to raise the yield, which means that you also have to raise the mortgage rates. So if the economy is doing poorly, then everybody wants to, check out of whatever investment they're currently in and buy bonds, and that would drive the demand up, which means it would lower the yield, i.e. lowering the interest rate. That has been the formula which has been going on for years and years and years. We have a lot of different things, I guess, from the Fed coming out this week. They give us a prognostication of what's happening. It's not this week. It's actually next week, the 27th of June, that we're going to get that report, whether the Fed is going to lower interest rates. And what they look at is the economy. They look at, the manufacturing sector. They look at automotive, obviously part of the manufacturing sector. They look at services. Did you know that most of the economy is made up of services? And i.e. it's financial services, it's the restaurant business, it's anything having to do with transferring money from you to them on a service that is performed. And about 75% of our trillion-dollar economy is that, services. The manufacturing sector is not doing well. We've had a downturn once again 2 months in a row, and we're kind of not really expecting a upturn for June. The June numbers have yet to come out, but they will. And what we will see is probably a continuation of a downward slide in manufacturing. Now, why does this affect? People are talking about how they're working and the economy is doing well, and the stock market is really up, and the bond market has remained steady, and the mortgage rates have also remained steady. All of these things are good. We have Elizabeth Warren, right, from Massachusetts, the Democratic senator.
Mm-hmm.
Right, she's running for president. So she was coming out and talking about how what we have is a danger marker, a problem in the economy, and then she's looking at 2007, 2008 as the way to look at this current market. And then there was a refutation from another guy online who talked about, no, the parallels, the similarities are completely different. And so what you have is, in all political seasons, you have someone that is saying the house is on fire, and I know how to put it out. And then you have someone else saying, no, the house is on fire, that person's crazy. And this is kind of what's happening here. So let's look at the economy as a whole. Manufacturing, as I said, is down. It has been predicted to be down. Those promised jobs never materialized, but at the same time, it hasn't fallen off a cliff, which we may have expected, especially when China and the United States have never really sat down and hammered out this trade agreement so that we can remove the tariffs and get manufacturing back to where it was. Also, the farm equipment that was supposed to be purchased during the last overture by China from the United States, that has not happened. And as a result, what we're trying to do is get envoys to China right now in the next couple of days to be able to try to continue the talks, continue the progress towards some kind of trade deal, because I think if we have a trade deal, if we have something that can remove the tariffs, we will see manufacturing better. And why is that important? Because manufacturing itself, although you may say, hey, you know what, manufacturing. Well, if you have 165 million people working, and 25% of those, that's a big number. That's 30, 40, 50 million people who are in the manufacturing sector making good money and making the type of money that you need in order to get a mortgage. And this is what the show is about. You need to get a mortgage, right? You need to get evidence that you can pay a 30-year mortgage back in 360 payments. That's how you get the best rate. That's how you get the best programs. And there are a ton of programs out there right now where you can qualify. There's even the dreaded stated program coming back. I don't like the stated program, and I'm not going to do them. But they're out there. What does that mean? They used to call it a liar loan, i.e., I'm going to put down on a piece of paper how much money I make every month. I don't have to prove it to you. I don't have to show you W-2s. I don't have to show you any income documentation, tax returns. You're just going to believe that what I tell you is the truth. That's a liar loan to me, and I'm not going to do it, because in the entire loan package, it says if you put your name down on this, i.e., Mr. or Mrs. Buyer, you're going to sign the 1003, which is the loan application, and it's going to say you make a certain amount of money and you don't. That's fraud. However, the system being set up right now in terms of that, what Elizabeth Warren is talking about, which is an oversaturated market of these kinds of loan programs, which they were in 2007 and 2008. And by the way, there aren't an oversaturation of these types of loans. They just aren't. Most loan companies that I know, and I know most banks that I know, will not touch these loans. They are for people who want to pay a higher interest rate, who need the loan to get into the house now. Now, we've had an ascending real estate market, and everybody knows as long as the market is going up in real estate, buying at any price is a good investment. Why? Because 6 months, a year, 2 years later, that investment is going to increase 3 to 5 to 6%, maybe even more. And this is the other thing I want to get into in a later section of the show. And also, as we talk to Victor Guerrero or George Gonzalez, a couple of real estate agent loan officers out in the Inland Empire, to talk about what's happened in the marketplace. What at the beginning of the year was kind of slow, and what we were seeing was an increased inventory. We are now not seeing that. We are seeing a decreased inventory, blamed on the fact that we're not building enough houses. We're not building enough houses in the Inland Empire. We're not building enough houses in Los Angeles or San Bernardino or Riverside counties. Look, we need housing at an affordable price. That sounds like a broken record. And I don't care what market you're in. Every buyer wants to buy something that's going to increase in value. We're at the end of a 10-year stretch. We're talking about certain sectors of the economy not doing as well as they could have or should have, and people are nervous. This is why when Elizabeth Warren says this, I think she's crying house on fire when it's not necessarily a house on fire. It may be something that we need to watch. It may be something that we need to do in terms of making sure that interest rates are a certain level. I'm not a big proponent in dropping interest rates right now either. I think what we've got is a market that needs some cooling so that buyers are taken off the table so that we have more housing available for those particular buyers that want to buy. Anyway, I'm Jeff Barton, your host in the mortgage world, and this is the Mortgage Voice, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, our telephone number. Pick up the phone, give us a call. We're over here talking about real estate and mortgages. I know you got questions. It is that time of the summer where you're having to move. You have to get into a place. You don't know where, but you know that you have to do it. So kids need to be in school. There are all kinds of questions and issues that pop up, and you're on a time crunch. We can help you here on the show because we have terrific people who come and describe what they do and how they do it. Malibu Funding, who is the sponsors for the show, you can call that telephone number that I gave at the top of each and every segment, and we'll be happy to help you. We have 40, 50 different loan officers and real estate agents in 10 different states that can help you. Malibu Funding sponsors the show. I'm really happy that they do that each and every week. The service that we bring is one of pleasure for me because I enjoy talking to consumers who need help in this very, difficult, usually once or twice in a lifetime project. Anyway, I'm here. Give me a call. If you want to email us, info@malibufunding.net is our email address. You can reach me on Twitter at Jeff6493. And as I said, I just shouted out the phone number. New guest on the show, great guy, known him for many years. Maybe, Victor, how old? How long have I known you? 10 years? More?
10 years. A little more, longer than 10 years now, Jeff.
Exactly. Well, this is Victor Guerrero from KV and Associates Realty out in the IE. Tell everybody where your office is and where you do most of your business, if you would, Victor.
Sure will. We're located in Inland Empire. The address is 3175 Sedona Court in Ontario, California. And we're in the beautiful side of Ontario, next to Ontario Mills.
Very nice. Okay, we have had a roller coaster year. We had an oversupply at the beginning of the year. We thought we would get more of an equal market, maybe drifting towards a buyer's market. But now looks like we're heading the opposite direction. What is happening in your view in your area?
What's happening, in my view, is the market is constricting. It's becoming more of a seller's market.
Right.
Its properties are shrinking, and mortgages interest rates are being low, so it's causing an opportunity for buyers to jump on the market, and at the same time, sellers are taking advantage of this opportunity.
Yeah, you know what? It's funny. We have a market that looks like a seller's market again for real estate, but as you just said, mortgage interest rates are so low, it makes it still attractive for a buyer. Isn't that what do you think?
That is so correct. The interest rate being so an all-time low, I haven't seen these rates since actually 2005 when the rates were really high. Then all of a sudden they went down, and now the rates are looking to be stable, which is totally awesome for the buyers.
Yeah, do you think that the rates are going to stay like this? Do you think they're going to go lower? I mean, I know that the Fed is talking about lowering short-term interest rates, which doesn't necessarily affect the mortgage interest rate directly, but it does have an effect in the bond market, and we might see interest rates go lower.
Well, actually, I don't think they're going to go in there because remember, when the Feds drop the rate, it doesn't necessarily will drop the interest rate.
No, right. I agree. Right.
So I personally think it's going to stay where it's at. I think the lowest we're going to see it is where it's currently at right now. And this is a great opportunity for first-time buyers.
Tell us, what do you like about when you do a loan for somebody? What's the process that you do? You interview them? Do you talk to them? Are they mostly referrals in your business? How does that work?
Well, the first thing I ask when I sit with a buyer is are you ready to buy a home? Now, wanting to buy a home isn't the same as being ready for one.
Right.
One of the simple steps when I interview a client, I usually tell them, can you afford the new home? There are several costs associated with buying a home. And obviously, you got to consider the down payment, you got to consider the mortgage payment, and you also consider the overall depth of the home. So to me, when I sit with a client, I start with that process. The second process, I ask them, where is your FICO score? Because actually the credit score is very, very important
Right.
to purchasing a home, especially in the mortgage industry.
Are you doing more QM loans or more non-QM loans with your borrowers?
It's a mixed combination, to be honest with you.
Mm-hmm.
I have both QM and non-QM. The important thing is sitting with the client and then giving them the information so they can actually formulate their thoughts and actually make an educated decision.
Yeah, okay. So when you get to that process and you're interviewing them and they, are most of your clients forthcoming? Because I know trying to establish trust obviously is the number one thing for anybody who's talking about money, right? Do I tell this guy what my real story is, or do I give him a story because that's what I think he needs to hear?
No, in today's age with so much information going out there, I think most of the clients that I've been dealing with have been very trustful.
Good.
They're very truthful. So I don't have a problem with any of the clients not being truthful.
What's the average size loan you're doing now in terms of first time purchases?
The first time purchase, the average size loan that I'm doing is about $375,000.
Is that the average cost of a house out there plus 10%, I suppose?
Yes, that's the average cost of a house
Mm-hmm.
currently in an empire. Plus 10%.
Yeah, no, I think that there is some opportunity. I mean, that sounds expensive, but I suppose if you compare it to Orange County, which is over $1 million in terms of their median home price, or LA County, which is over $750,000, it's still a pretty good, affordable thing that I guess, is out there and available, right?
No, if you compare it to the other counties, you're going to see that the San Bernardino County is priced well, especially the medium home. First-time buyers are able to get a good opportunity in the $400,000 price range, where you could get a brand new home priced in the $500,000 and still get a decent home.
Right. No, I agree. I mean, I have a couple of guests that are coming on the show today. One of them lives in Rancho, which is a very expensive neighborhood, right?
That's correct. Rancho is a high-priced area.
Right. And so when people think of the Inland Empire or, San Bernardino, Riverside counties, they think, oh, man, it's a lower priced home, when really, if you're looking at it, that's really a very expensive home compared to, some other parts of the country or even some other parts in the state of California.
That's correct. As you notice, prices in California has been increasingly, and it keeps going up. As long as rates are remaining low, the supply of homes is going to be driving up the price now.
Right.
If you look at the new homes in the Empire, you are going to get more money for your home. Or it's going to be more home for your money, I should say.
Right. No, I think that's true. Obviously, if you're working in San Bernardino or Riverside counties, you want to be able to obviously maximize your income. Buying there makes a lot more sense than if you had to buy in a different county. I totally get that.
I agree with you. I agree with you 100% there.
Yeah. Okay. Where do you see? So you said the mortgage rates will be about the same now. Do you think that's true throughout the year, or now that we're going to get into this silly election season, and that's not even that far off? I mean, we're really like 14 months away from the election, right? What is it? July, August, September? Yeah, maybe more
right.
like 15, 16 months. But still, that can really affect how people spend their money. And I don't know if you're thinking about that, but certainly anything that happens in the political arena affecting real estate prices, affecting mortgage rates, is something that, I think can be affected. So I'm telling people to get out there and buy now. So because you know what the interest rates are now, and you know that the real estate prices where they are. I'm just afraid that the real estate prices will go up, or something happens and the mortgage rates go up.
No, actually, Jeff, you're quite right. Because it's going to be a political season coming up.
Right.
And we're seeing in the forecast, neither party is going to want to cause something for the interest rate to go up. So buyers should take advantage currently right now and go out and buy, because these rates will not remain this low. Anything could happen in the future. We all know that once a political party gets elected. So it's very important to start beginning the process now. Start looking for a new home now, because these rates will not remain this low.
Hey, Victor, shout out your phone number for people so that if they want to get a hold of you, they can.
Sure. My telephone number is 909-291-2428. That's my office numbers. My cell phone number is 909-225-1045.
This has been Victor Guerrero from KV and Associates Realty. Vic, thanks very much.
Thank you, Jeff. It's been a great pleasure talking to you.
Great pleasure talking to you again, and nice to hear your voice. I'm Jeff Barton. You're hosting for the Mortgage Voice, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929, our telephone number. And yes, it has been pointed out to me that if you dial that phone number, you will not get through on this show. Au contraire, try it right now. Pick up the phone, and I will answer it myself. If I don't answer it, of course, it'll be on my voicemail, and then I'll call you back after the show to answer any questions you might have about what we're discussing here on the show or any show that is archived on the website. If you go to YouTube, Jeff Barton, the real estate voice, or the RE voice, and you will see me there in all my glory, fully clothed, and yeah, you can get a number of the shows. We talk all kinds of things about real estate and mortgages. This is the season to be buying something. Want to say hi to San Bernardino Riverside, KCAA, KMET, and K Tahoe, the great stations that put us on the air each and every week. We have a loyal following. And for those who are listening for the first time, we try to bring some guests to the show each and every week who can help you by demonstrating their particular skills and services to you, as well as give you a different viewpoint. It's not just about Jeff Barton, who works at Malibu Funding. It's also about other real estate and mortgage professionals who work for different companies, as well as home inspectors and title people and feng shui people. We've had all kinds on the show over the years that we've been doing it. We're in our 5th year, maybe our 6th year, and so I'm very pleased about that. Today, Josh Thompson coming on the show once again. He's been on the show several times. Great real estate and mortgage broker. Josh, how are you?
I'm doing great, Jeff. How are you?
I'm just fine. Thank you very much. Okay, so we've been talking earlier segment of the show about the market, what's happening. Give our audience a little idea as to where you do most of your business, and then a little bit of synopsis of what you think the market's doing in both real estate and mortgages.
Okay, got it. Well, yeah, I do a lot of my business in L.A. County, but sometimes I'm doing some things in San Bernardino County and Riverside as well. Where I think the market is going now, I mean, rates are great.
Yep.
So if you have an adjustable rate mortgage or an ARM that's going live soon, I definitely would recommend refinance as soon as possible. I think the Fed is cutting the Fed funds rate next week by 50 basis points.
Oh, you think 50? Really?
I've heard 50.
Wow.
Maybe
might
be a quarter, but I know that's going to definitely have a positive impact on mortgage rates.
I think so too. Yeah.
Oh yeah. So I think just check in with anyone that's Malibu Funding or just to see where your rate will be priced at, because I think it would be advantageous to refinance now. But on the other end of it, in the real estate market, I see that home sales are declining.
Yeah.
I see that the appreciation in California is only up, I think, 1.4% from where it was last year. So it's kind of slowing a little bit.
Oh yeah, that's big time slowing. It's interesting you say that, because what we read here is that the bidding wars are about ready to start in Southern California because we just don't have enough houses.
Yeah. That's true. California is its own beast. I mean, I think they need to definitely, loosen up some developmental regulations so developers can come in and build more housing, because that's definitely something that we're struggling with. Even, because that's another thing I do, Jeff.
I was about to say, you're involved in development yourself and have been working with the city, I believe, of Inglewood, right, in terms of getting one of your projects done. How's that going?
Oh, it's going good. We're maybe 2 months away from having permits. So it's been a long process.
Yes.
And now we're getting through site plan review. So everything's looking good there. But even in Inglewood, there's so much that's happening there, and I do appreciate that city for understanding just the need for new housing.
Right.
So there's a lot of projects. Even our project, we kind of went outside of what the zoning would allow, and won that approval from the city. And I know there's a lot more cities in California that could benefit, and a lot of people that could benefit from that type of stuff. So.
Okay, so you're saying Inglewood is business friendly in terms of development, in terms of bringing new housing to the market. Did they put any restrictions on you in terms of the size or the cost, the final cost, to make it in a certain income bracket, or you pretty much just fought for what you wanted, got it, and can do whatever you want with the rest of it?
No, can do it. Do what we want with the rest of it.
Great.
Market rate. Originally, we were going to do some affordable units on a condominium project so we can get a density bonus.
Right.
But the city of Inglewood, I think, kind of they wanted something different, and we kind of switched the plan into doing a small subdivision of 20 single families. So that's the route that we're going. Still, I think that we're going to designate one of the homes to an affordable buyer, just to kind of do a service and give back to members of the community.
Yeah, that's really good. I know that as a developer, when I first got into the business, it was down in Arizona. Before they built the football stadium down there in Glendale, we had a lot that doing exactly what you did. It was a couple hundred different lots, and it was very, very difficult, even at that time. And we're talking 25, 30 years ago when I got into the real estate and mortgage markets. What do you think the overall, appetite that people would have if they understood how difficult it was to get into the development or get into building? Do you think there would be an appetite? Because most people say, I'll never do this again.
Oh, yeah, no, I don't think many people would have an appetite for it if they knew what it entailed.
Right.
Yeah, you kind of have to roll with the punches and expect the unexpected. That's the biggest, word of advice I would give to anyone that gets into development, because the unexpected and worst case scenario will happen multiple times over. So it's good to make sure that you have a project that really pencils out on paper. And luckily, like you're saying, in places where there's a new type of catalyst for economic growth, such as a stadium or things like that.
Mm-hmm.
We're lucky that since I've bought these properties, I've the appreciation value is kind of washing some of the additional cost of holding costs and different things that we've encountered throughout the process. So,
are you going to build yourself, or are you going to roll it to a builder?
Well, no, we're going to build it ourselves, but actually, I'll give them a little pub here on the radio show. We're doing it with a company called Proto Homes.
Okay.
It's a really cool company that does modern housing. It's actually prefab housing, and it's really an interesting kind of thing. They're doing stuff in West Hollywood and
right.
Brentwood and really high end areas, and their houses sell for above market value in those areas. So it definitely streamlines the building process.
Right.
I think gives you a more quality product at the same time.
When do you plan to bring these to market if you get your permit in 2 months? In a year from then?
Yeah, it'll be about 12 to 14 months.
I see.
From that time.
Oh, that's really good. And now you can also speak to the fact that the subs out there, the contracting, what do you think? Do you think you're going to have any issues with hiring people? Because there's, obviously a demand for those services all over the place.
Oh, yeah. No. There will be no issue on finding those people. We have several people that we've been interviewing now for that process. It's just about, I think in construction, the main thing is time management and scheduling.
Right,
I think that's where all of the money is. So, going with the Proto Homes company, that was a big reason why we chose them, because they have such a streamlined process. But we are doing semi-subterranean parking.
I see.
Because there's 2-car garages that are 7 feet below grade for each. So kind of, got to make sure we get someone that's really familiar with that, because that can be a time-consuming and very costly process. And that's a process that you can even, you can have structural plans, but once you start digging,
right,
you can find some things that you're not aware of, and it can cost you a lot more money. So,
hey, Josh, shout out your phone number for somebody who wants to talk development or wants to talk mortgage rates.
Oh, yeah, my number is 323-945-5694. Yeah, and also I wanted to shout out to non-QM loan products. That's definitely something that I would advise any self-employed person to check out, because they can really meet the needs of self-employed borrowers. So feel free to give me a call.
Thanks, Josh. Thanks very much for coming on the show. This has been Josh Thompson, loan officer and developer. Thanks, Josh.
Having me.
No problem. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is a telephone number. Pick up the phone, give us a call, ask a question, write down the number. If you hear something on the show that you want to ask about later, dial the number, ask the question. Somebody will get back to you ASAP. If you want to talk to me directly, that's exactly how you do it. Just call that 888-713-2929 number. And as I said, the information on the show is available on YouTube. If you go there as well, go to my YouTube channel, Jeff Barton, the RE Voice, and you will see this as well as many other shows, as well as our Las Vegas real estate show, which we do several times during the month. About once a week, it airs on a number of television stations there in Las Vegas, but it has same information, a lot of the same people who have been on both shows trying to bring you answers to your real estate and mortgage needs out there in the marketplace. With that, once again, from lovely Rancho Cucamonga is George Gonzalez, a mortgage professional who is a terrific real estate agent, as well as a unbelievable mortgage loan officer and friend as well. George, how are you?
Hey, I'm doing excellent, Jeff. Thanks for asking, man. How's everything out there in the valley?
You know what? Hot today, and it was very humid, and everything that we like about Southern California in the fall, and in the spring we hate in the summer because it just gets too hot.
Right. I hear you. Everybody's looking to buy a house with a swimming pool right now. That's what it looks like.
Exactly. Okay, tell us what's happening out in Rancho. Tell us what's going on in the market, both real estate as well as mortgages.
All right. Well, right now it seems like as if everybody's wanting to do everything all at once.
Right.
First of all, the rates are super low, so refinances are just lined up, and people just simple cost them maybe at $2,000 for closing costs. They're going to save $300-400 a month. They're jumping all over these refis,
of course,
because the rates are super low, man. Even, for instance, more than a couple of clients that I've just actually closed purchases on, like FHA, let's say a year and a half, 2 years maybe.
Yep.
They're coming back, getting rid of that MIP. Their scores improved and saving $350-400 a month right off the bat. So those ones are lined up on the refinance side. But with the purchases as well, the pre-approvals buyers are saying, "Hey, man, the price is probably a little high, but man, with the low interest rates, it's helping the payment on them. It's not hurting as bad as it would a year ago or a year and a half ago when they were a little higher."
You mentioned off air that you have a number of clients looking to get, into a real estate contract, into escrow. What is the product like out there? Is there enough of it to go around, and do you see bidding wars at all?
Exactly. That's exactly where I was getting to. Is right now, I have a number of buyers who are just out there searching, and just like in the past when rates were low and the housing was low, where there's probably in one block radius, there's probably 10 houses for sale. Maybe 3 of them are ready to move in. You don't got to do much. And
right.
the other 7 you might need to put in a few $1,000s worth of work to get in. But they're selling nearly the same price. So the bidding wars are obviously going for the top 3 who doesn't want to, people who don't really want to put no more money in the house or too much, when they move in.
Right. Right. So are you seeing any kind of investment flipping market, or is the market just too expensive and there's too many bidders? I mean,
Well, well, out here in California, the flippers is kind of slowing down, and
right.
I'm noticing, since we're approved in Texas and a number of these other states where the housing market is still affordable over there, and so a lot of investors that I used to work with out here are actually going out of state and doing some investments out of state to make a little more margin.
Yeah, I've heard that too, and I know that Southern California prices being what they are, and now we're reaching record levels in all areas, not just in Los Angeles or some of the richer cities on the coast in Orange County and San Diego, but it reaches all the way way past where you are out into the desert. I mean, we're seeing some prices that we just haven't seen.
Right. Especially like you said, up in the desert, up the hill in Victorville, Hesperia, houses are going. The advantage of that up there is that at least up there you're still getting a nice piece of land. You're not all crowded up like they're building these tract homes over here in my area right now. The big thing is 3-story condos being built everywhere.
Wow.
And it's just like that's the new modern living. I guess these people want to do. They're trying to get like L.A. County. And just build condos on top of each other. 3 sets. They're selling, man. The Lennar's building, I think, 2 different sets of condominiums in my area right here locally, and like, wow, sold. Every time I go by,
wow.
sold. You're too late. I'm like, wow, okay.
That's that high density living, that you get in the city because the land's too expensive, and I guess that's happened already in Rancho as well.
Yeah, Rancho's been pretty popular. The housing over here, with a piece of land, you're not going to find nothing less than $500,000.
Right. Right.
So, but if you just go, let's say east about 15, 20 miles, Fontana area, Rialto area, probably get the same type of land you would in Rancho for $150,000 less, or $120,000 less, which that's obviously what everybody's trying to do.
Sure, absolutely. Do you see a lot of movement in the real estate prices or in the mortgage rates over the next, towards the end of the year?
Well, I'm not sure. I'm sure you're aware of the Fed saying that,
Yep.
I don't know. And, to me, when they say something, they probably won't do it. They just throw it out there, but they're saying that they still want to cut the rates, the federal rate by 0.25%.
Yeah, I think it's a quarter.
Basis
Right.
points.
Right, 25 basis points. I agree with you there. I think that's probably going to happen.
Right. So if that happens, then man, that just opens up more buyers and more qualified buyers. They qualify for more, and just more refis as we're going. I'm loving it, Jeff. I'm telling you right now, man. I thought, man, I'm getting too busy, but then I kick myself in the head and say, man, this is what you want. Get your butt in gear. So it's lovely.
Now, we're at the end of a 10-year cycle, right? And these cycles usually last 8 to 10 years. Do you have any worries, any nervousness about the market maybe not performing for the next year and a half through the election?
Well, here's my thing, and I tell everybody that's a good question because everybody wants to know that question.
Sure, of course.
And I wish I knew the for sure answer, but I don't know the future. But what I can tell you is the loans that we're giving now are still not easy loans. These people still have to qualify. Underwriters are still picking the loans apart, trying to deny them every chance they get.
Right.
You need a down payment, so you need to have some skin in the game. You need to prove your income, which back when the market crashed back then, you didn't need to prove your income or you didn't need no skin in the game. It was just credit score and you breathe and you qualify.
Right. Right.
But now I don't see I don't see no big layoffs. Because then that's when you'll know when people will start having to lose their stuff is when you see big layoffs from big corporations, good company corporations. But man, I don't see none of it, Jeff. And I keep hearing it over and over. Oh, be careful! I don't want to do this because I'm not even paying attention to that. I'm just going with the flow how we're going.
Well, I agree with you, and I've read articles. And today I was on the earlier segment of the show talking about how one person would say, "Oh my gosh, the sky is falling," and the other person would say, "No, it's not falling. You're crazy." So it's just, I guess, dependent on who you talk to. And there's always somebody that wants to be the person that says, "I told you so." And I don't think we're in that kind of market right now. I see good employment. I see reasonable increases in real estate prices, not abnormal. And I see any of these non-QM loans, they don't get sold to the federal government anyway anymore.
That's correct. And then also these new millennials, back in the day, it was just the husband working. But now, there's both of them have good careers. these days.
Right.
So, it's not uncommon for a couple, like some people that I have, I'm like, wow, they both make $100,000 a year, so they're comfortable.
Right.
So it's like, oh, okay, even if one loses the job, it might be a little tight, but they're still comfortable.
Hey, George, could you shout out your phone number for somebody out there who needs a terrific loan officer out in Rancho Cucamonga?
Yeah, my phone number direct is 909 area code 900-9565.
George, thank you very much for coming on the show once again, elucidating what's happening in the market, and I really appreciate it. Thank you.
Hey, thank you, Jeff.
Okay, and that's George Gonzalez, loan officer for Malibu Funding. This is Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number. If you do call and you can't get through, we will call you back after the show. We do get some operators that do take those calls, and if you're, like I say, have a question, you want a question answered, we will get back to you in person or we'll answer it on the next show. I do appreciate everybody out at KCAA, KMET, and K-Tahoe who listen to the show each and every week, and those fine people that put the show on the air. We are on air here at the studio today, and again, appreciate you listening. Daryl, things are good?
Things are good.
Excellent.
Yeah.
So last week we were talking a little bit about some of the issues that come up with problems in the mortgage industry, with problems on title, with problems on, all things related to sales of houses. One of the most interesting things that I have come across in terms of that is what happens when you have a issue on your title when you're going to be buying a house. Now, what do I mean by that? You get a prelim, and everybody calls it a prelim, and it's a preliminary title report once you purchase a house or when you're about to purchase a house, and you get to look at it and see whether you approve of it or not. All of the liens on that particular property are going to be removed so that you get what they call a free and clear title. Well, sometimes things come up and they come back to haunt you, i.e., a problem that was supposed to have been paid has not been paid, and the debtor wants to reattach either to the borrower that sold or the seller that sold or to the property. The interesting part of that is, what do you do in that particular case?
Oh, man, you dig. You dig through boxes of paper and paper and paper, and you go back and try to recreate and find out what happened. You got to go through escrow. You need to go through title. You need to go through court records. It takes time.
Yeah, it does. And there is no magic formula for this, right?
No.
It is purely work and elbow grease that'll fix the problem.
And it's the other thing, obviously, it's out-of-pocket expense, too, because you're the only one that is going to benefit from knowing the answer.
Right, or care. Nobody cares. And that's the sad truth of any business is that once the sale is completed, everybody disappears and they move on to the next sale. It's just the way business is done in the U.S. But if you have one of these issues, whether it's a lot line that you thought you had insured that isn't, i.e. your driveway is on your neighbor's property and you thought it was insured because it was an easement, well, it's not an easement and it's not insured, and the neighbor's wanting you to remove your driveway. What do you do then? Good question. Best thing to do, and the best thing I've seen done, is to try to go to the title company and look at your title policy. There are several title policies out there. Most of them insure boundary lines. Most of them insure property lines and easements. All of this will be on your title report. And if it isn't on your title report, you got to make sure that it is, because you have to check all of these issues before you buy a house to make sure that you're not only getting what you purchase, but also that that particular issue is covered in your policy, whether it's an ALTA, whether it's a standard policy, whether it's an extended policy. You need to make sure that those particular issues are covered. Now, you're in a real estate transaction. The title work done on a real estate transaction has to do with the title report, but it also has to do with insurance. The insurance itself is where the title company obviously makes all their money. So they need to insure the property from the bank's standpoint, because the bank's going to lend you all the money, right? Or the lender, whoever's giving you the money. So you have this loan that you're going to get that has to be insured, or else the lender won't give you the money. So the title company insures the loan for the buyer. The seller insures the property for the buyer, right? So you have two types of insurance, title insurance, going out on a purchase loan. Make sure you understand that. You're a buyer. You're thinking, okay, I'm going to get title insurance, but on your contract you put down, okay, seller to pay title insurance, which is fine, but don't forget, you've got to pay the title insurance for the loan. So there are two costs there, and when you're doing your cost estimates, make sure that you understand both costs and what they are. Okay, little news to use right now. The U.S. home sales tumble as prices surge to record high. We talked about this the last 2 months on the show. We have gone from a oversupply, or I guess 50-50 supply, to now we don't have enough houses. And as a result of that, we're getting bidding wars all across the U.S. now that we didn't see. Now, last week's show or the week before show, we talked about possibly September or October. Well, it's happening now. In this particular article by Lucia, Mudikani. Sorry, Lucia, I just butchered your name. But Ms. Mudikani talked all about what's happening in the U.S. The annual rate of units sold in the United States, i.e. houses, 5.27 million units adjusted to last month. That's a lot, right? But if you compare that to what was happening in the previous year, you'll see that that's down by about 500,000 houses this year alone in terms of what's going to be sold. Okay, so we need housing. We need a number of new houses to be built, and it's not happening. So this is why prices, both locally and nationally, are going to be going up. And we talked about it. As I said, you better get out there because the interest rates right now are pretty good. Let's go over the interest rates right now in the News to Use section. Interest rates on a 30-year fixed, on average, is 3.875, 3.8%. Those are still smoking rates. And because what we have is an unusual occurrence, i.e. the bond market seems to be holding at 3.875 for the 30-year fixed rate. Now, why is that? Why do we have demand, or do we have demand? I think the reason is because we have this trade war going on, and we have a lot of pressure from the President of the United States on a lot of federal agencies, and as a result of that, it has put pressure to maintain rates at a certain level. And because of that, and this is the other interesting thing about what happens in politics. You can say a lot of different things as the President of the United States, but as you say them in real time, it affects both the stock market and the bond market, which are the two, things that we watch, one in the mortgage world and the other one in the investment world. Most people who have a home already have a mortgage. I mean, we're only going to sell, as I just said, let's say 5.5 million houses this year. Now that may seem a lot, but in reality, it's not really a lot when you consider there's 50, 60 million homes in the United States. So we're clocking in at maybe 4 or 5% of what the homes are that we're already existing that we're selling each and every year. And I don't think that that's a big deal. But he affects the price of the houses, he affects the price of the bond market, and he alone affects the price of what's happening in the stock market simply by either, saying that he doesn't like what's going on at the Fed, saying that he thinks that the person who's head of FDIC should be replaced, which, by the way, is happening. By the way, a lot of the federal positions which have gone unfulfilled are being handled, and this is one of the clever things that the guy's done, whether you agree with the appointment process or not. If you don't want to have the Senate process for confirmation hearings of the Secretary of State, you can have an acting Secretary of State and not go through that process, which is exactly what's happened in many of the agencies in the federal government. There are acting heads all over the place, and because they are appointed by the president and don't go through the vetting process, people in key positions who are able to affect the mortgage rates, the borrowing rate, the discount rate, all kinds of things, regulatory-wise, whether it be in the environment or in the financial sector, are all appointed because they are acting as the chiefs and as the heads of those agencies. This is why when I say the president normally doesn't affect markets this way, normally doesn't affect the mortgage market this way, but in this particular at this particular time, it really has. So anyway, I'm Jeff Barton. I'm your host for The Mortgage Voice. We're here each and every week. Thanks for tuning in, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.